Hey everyone, welcome back to the channel. Today, we're tackling a topic that can feel overwhelming, but is absolutely crucial for your long-term happiness and security. Planning your financial future. It's not just about getting rich quick. It's about building a life where you have freedom, choices, and peace of mind. So, grab a notepad, and let's break down how to create a solid financial plan, step by step. First things first. You can't plan a journey without knowing where you're starting from. This means you need to get a clear picture of your current financial situation. Take a deep breath, and let's do a financial checkup. List all your income sources, your salary, any side hustles, or other earnings. Now, for the less fun part, list all your expenses. Track everything for a month. And I mean everything from your rent or mortgage down to that daily coffee. Use an app or simple spreadsheet. The goal here isn't to judge yourself. It's just to gather data. What's coming in and what's going out. This will give you your net cash flow. Once you know your starting point, it's time to decide on your destination. What are your financial goals? And be specific. I want to be rich isn't a goal, it's a dream. A goal is something like, I want to save $20,000 for a down payment on a house in the next 5 years. Or, I want to pay off my $10,000 student loan in 3 years. Or even, I want to have a $1 million retirement fund by age 60. Break your goals down into short term, like saving for a vacation next year. Mid-term, like buying a car in 3 years. And long-term, like retirement. Write them down. Seeing them in black and white makes them real and gives you something concrete to work towards. This step is about defining what you truly want your money to do for you. Now that you know where you are and where you want to go, let's create the map to get there. This is your budget. I know, the word budget can sound restrictive, but think of it as a spending plan that empowers you. It tells your money where to go, instead of you wondering where it went. A great method to start with is the 50-30-20ths rule. It's simple. 50% of your after-tax income goes to needs things, like housing, utilities, groceries, and transportation. 30% goes to wants, dining out, entertainment, hobbies, and shopping. And the most important part, 20% goes directly to savings and debt repayment. This isn't a strict law, it's a guideline. You can adjust the percentages to fit your life and your goals. If you have aggressive debt payoff goals, maybe you shift to a 50-20-30 split, putting 30% towards your financial goals. The key is to be intentional with every dollar. With a budget in place, let's talk about one of the most critical first steps for financial security: building an emergency fund. Life is unpredictable. Your car might break down. You could have an unexpected medical bill. Or you might face a job loss. An emergency fund is your financial safety net that keeps you from going into debt when these things happen. The standard advice is to save 3 to 6 months worth of essential living expenses. If your essential monthly bills are $2,000, you're aiming for a fund of $6,000 to $12,000. Keep this money in a separate, high-yield savings account. It needs to be easily accessible, but not so easy that you're tempted to dip into it for non-emergencies. Start small if you need to. Even $500 is a fantastic start that can prevent a small problem from becoming a financial disaster. Okay, you have a budget, and an emergency fund is growing. Now it's time to tackle debt, especially high-interest debt. Things like credit card balances or personal loans can be like an anchor, weighing down your financial progress. There are 2 popular strategies for this: the avalanche method and the snowball method. With the avalanche method, you focus on paying off the debt with the highest interest rate first, while making minimum payments on everything else. This saves you the most money in interest over time. With the snowball method, you focus on paying off the smallest debt first, regardless of the interest rate. Once that's paid off, you roll that payment amount into the next smallest debt. This method gives you quick wins and builds momentum, which can be very motivating. Neither method is right or wrong. Choose the one that you're more likely to stick with. The best plan is the one you can follow consistently. Now, for the exciting part: making your money work for you through investing. This is how you build real, long-term wealth. Many people think investing is only for the rich or that it's too complicated, but that's a myth. You can start with very small amounts. The most important thing is to start early, thanks to the magic of compound interest. Compound interest is basically interest, earning interest. your money starts to grow exponentially over time. As you start your financial journey, it's crucial to protect yourself and your assets. This means having the right insurance. Health insurance is a non-negotiable. One major medical event can wipe out years of savings. If you have dependents who rely on your income, you need life insurance. If you're unable to work due to illness or injury, disability insurance can replace a portion of your income. And of course, a homeowner's or renter's insurance protects your property. Think of insurance as a helmet for your financial life. You hope you never need it, but you'll be incredibly glad you have it if something goes wrong. Review your coverage annually to make sure it still fits your needs. Finally, remember that a financial plan isn't something you set and forget. It's a living document. Your life will change. You might get a raise, get married, have kids, or change your career goals. You should review your financial plan at least once a year, or whenever you have a major life event. Check in on your budget. Are you sticking to it? Do your goals still make sense? Is your investment strategy still aligned with your risk tolerance and timeline? Regular check-ins keep you on track and allow you to make adjustments as your life evolves. This journey is a marathon, not a sprint, and staying engaged is the key to crossing the finish line successfully. So to recap, understand your current financial picture set, clear and specific goals, create a budget that works for you, build that all-important emergency fund attack. High interests, debt, start investing for the long term. Protect yourself with insurance and review your plan regularly. It might seem like a lot, but by taking it one step at a time, you can move from feeling stressed about money to feeling empowered and in control of your future. You can absolutely do this. Thank you so much for watching. If you found this video helpful, please give it a thumbs up. And don't forget to subscribe for more content on building a life you love. Let me know in the comments which step you're going to start with today. See you in the next video.